The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for starting your trading day off. We start things off this morning, folks. A Fed meeting begins today. We get an announcement tomorrow. We got some earnings already out. We got some labor costs out as well. Market catching a bit off the lows. We're positive by 10 points in the S&Ps. If you weren't up early this morning, though, things looked a lot more dire. We were negative by about 0.5% in the markets by about 6:30 in the morning. So you're not talking about 2, 3, 4 in the morning. For many traders, you're up by 6, 7 in the morning. You're looking at the markets. So you start the day off negative by about 0.5%. You see the volatility coming into the market at about 8:30. And let's just jump right to that number. Right now, we're talking about U.S. labor costs, trailing forecast, adding to slower inflation signs. Okay. Now, boy, we have a Fed meeting that begins today. We have an announcement tomorrow. Indications are all but assured, pretty much. Quarter basis point is what they'll be doing. Then you have the meeting into March, and I will get that March. Let's see. Let's pull up exactly when that March meeting is. The March meeting, you're talking about March 21st and 22nd, okay, is the March meeting. I'll remember that now, right after my birthday, March 20th. Yeah, right around 21st, 22nd. So you got to go about 6 weeks in between meetings. Okay, so we get the next meeting March 22nd. And then you're going all the way out until May. Okay, so you're going to get January, February, March numbers. You probably won't get May numbers. April numbers, because that meeting in May happening the 2nd and the 3rd, we're not going to have non-farm payrolls, not going to have retail sales, but you're going to get January, February, and March. So keep that in mind when you get all the rhetoric here in terms of where we're going. Where we're going in May, folks, is where the data is going to say we're going on those meetings, on those numbers for January, February, and March. And we're still seeing those numbers come out for December. So just keep that in mind. We got 3 more months to go. The market may be getting ahead of itself a bit. The data might line up. But nonetheless, there's 2 cases of where the data may go. Now, this one, you're only talking about a 0.1% deviation in terms of where it comes. Employment cost index rose 1%. This was the number out at 8:30 that the market is liking. In the final 3 months of 2022, moderation in compensation reflected services and government. You take a look at where the numbers are. I mean, it's a trend. The number is declining. Okay. The change in the in the employment cost index year over year, plateauing, as those quarter over quarter numbers have been declining. The market was looking for about a 1.1% advance. And that's all I'll say. In terms of a slight beat, you're talking about 0.1%. You're talking about on a quarter basis. And we'll see where we go from there, man. The market, though, it gets that number. It gets it out of a Fed meeting that begins today, and it likes it, and it's running with it right now in terms of markets trading higher. S&P's up by 12. Now, you back this thing up a little bit. You trade down 100 points, folks, from Friday to where we were early this morning. Okay, you made it to a low of 4,013. Is that the low? What is the exact low? Let's get it. No, 4,750. So you do trade down more than 100 points from where you were Friday, let alone the acceleration we had coming into basically the end of my program. There's been a lot of days recently. It feels like I do the show from 9 till 10, and then the market turns at 10 o'clock in whatever way it's going to run, right? It digests things for a half hour or so, and at 10 o'clock, especially on down days, you have the market turning around a half hour into the trading day. That's what happened yesterday. You're up at 4,075 by the end of the day. You're down there at about 4,030. Okay, jumping around. What else we have? Crude, commodities. We got a 76 handle for the price of crude early this morning. We're trading at 77.40. Bitcoin, can't hold Bitcoin down, man. 23,250. Remarkable. Gold contract. There's some volatility for you on gold, man. Down to 1915, up to 1935. We'll jump to the dollar index in a moment. The 10-year, higher price, lower yield. We got the 10-year up by 15 ticks right now. And that's talking about correlating. We're pushing a yield right now on the 10-year of under 3.5, 3.49%, back under that yield level on the 10-year. The 30-year up by 24 ticks, 130.17. And we jump over to the volatility index right now. The VIX back under 20 as we speak, 1998 on the VIX. And let's jump around to some of those currencies as we kick off Tuesday trading. Up to 102.60, man, and back to 102.26. You can see the volatility and how that plays into the gold contract. We saw gold down to about, 1915. Gold charges back to 1935. There you see the dollar index. We jump over to the euro. Euro US dollar. Negative overnight. We get that number at 8:30. We're jumping from about 108.3 to 108.5. And let's jump over to the yen as we wrap up this market wrap. And there's a little yen action, man, from above 130 to 129.88. We put this back on a daily. Yeah, well above that channel line in terms of where we are, where we go from here, sitting at about 130 on the US dollar yen. All right, jumping around to a couple. Yeah, well, let's go back to this one for a moment because the hourly earnings is important to touch on. So unlike the earning measures in the monthly jobs report, which is forecast to show this week that average hourly earnings moderated, the employment cost index is not distorted by employment shifts among occupations or industries. Compared with a year earlier, labor cost measures rose 5.1%, a slight pickup from the prior period. However, excluding incentive-paid occupations, a measure that the Fed closes, employment costs decelerated. There. Yeah. Man, it's tough, though. Look at these numbers. However, many companies are still struggling. Walmart is raising its starting wage 17%. 17%, man. And that is like the base of everything, right? Walmart. They keep the cost trim because their margins are low. They're the biggest provider at the lowest cost, and they are pushing their wages up 17%. And then you get to the other side of that, Citigroup. Junior bankers, 15%. Now, junior bankers, that's the entry level to their business, but nonetheless, man, 15%, 17% across the board. That number comes in, the market likes it, and it's a small beat. And nonetheless, you keep getting small beats. Yeah, the market's going to like it. But again, we got a lot of data coming down the line, and things may get a little sticky. It's not going to be as easy as coming down from 5 to 4 to 3 to 2, etc. as we go. All right, with that in mind, I wake up this morning, and there's a lot of great news in terms of on Bloomberg. Wall Street Journal has some great analysis. New York Times Business, they have some great. Washington Post does some great work I like. And this was the headline of Bloomberg this morning, okay? Fed points toward a pause in May once hikes have time to sink in. Saying, okay, did I miss something big this morning? Is the market really reacting to it? And it's just interesting, folks, because now, first of all, that's not the headline on Bloomberg anymore because it's been replaced by that 8:30 economic data point for the labor costs, okay? The article I was just talking about has shifted to number 2, you could say, on the top spot. Nonetheless, Adani gets the graphic number 2 below top billing, okay? But it was interesting that this is the headline, okay? And what this is talking about here is it's talking about how much data do you need to infer a trend. It specifically is talking about Christopher Waller, who is a Fed governor, and he has been a hawk for a while. And he specifically was talking about, do you need 3 months of data? Do you need 6 months of data? We've had about 3 months of data. He needs about 6 months of data. Where do we get 6 months of data? You get 6 months of data when you start coming into things for the May meeting, possibly. So we'll come back. We'll talk about this a little bit. A lot of data to come. Nonetheless, folks, we're going to get into some of it. We'll talk to our man Kevin Hincks when we get back. Stay tuned. We got the S&Ps right now. Positive prices coming in as the Fed meeting begins. Stay tuned, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P futures up by 6 points right now. You get the NASDAQ 100 up by 17, Dow up by 56. We jump around to some of the equities that are driving the action this morning. GM with some strong numbers, man. GM up by almost $2.50 right now, trading from $36.29 to $38.70. Big week of earnings as we get some big companies, the tech companies, coming out with their numbers on Thursday. We got a Fed meeting begins today. Announcement tomorrow at 2 p.m. Eastern Time. Press conference at 2:30. To talk about it, let's jump over to our man, Kevin Hincks. Every trading day, folks, right here on Tiger TV, TD Ameritrade Network with the program Fast Market. Your host, Kevin Hincks, Tom White. They host the show every day at 12 o'clock Eastern Time, folks. We stream it right here on Tiger TV. They walk you through hypothetical trade setups. If you ever wanted to get into options or just understand how they work, all right, please check out the program. It's a great time to do it as we are in the thick of earnings and we're in the thick of the Fed. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, hurry up and wait. As day one of the Fed meeting kicks off, not a lot of news will come out of there, but we do have some earnings, and we do have, Tommy, what I think is a very jittery market with the move it's already made so far this year and a Fed meeting coming up where we expect Jerome Powell to raise rates again and then guide to the future of what he's going to do with interest rates. I think you've got a market here that is a little thin pre-open and a little jittery once the day starts.
Yeah, you make some great points, man. The market, I got it up on the Thinkorswim platform, trading above 4,000. A little bit of a sell-off yesterday, but this morning on some strong numbers, which is some weaker than expected. Employment cost index numbers catching a little bit of a bounce back into positive territory. But what do you think of the case, Kevin? I woke up early this morning, and on the front of Bloomberg, it was talking about that, they may pause come May. And we get that meeting in early May. The only meeting we have in between now and then is a meeting in the middle of March. But by the time you get to May, we're going to get January, February, March data that comes. The mentality and the question I'm asking myself, right, is I feel like the market is almost on like a bull case scenario with what you kind of mentioned with we've had quite a little run up right now. The market probably anticipating that the data possibly lines up over the next 3 months for that to happen. But I feel like there's multiple scenarios, and the market's kind of pricing in the bull scenario of the inflation trend is down and May is maybe where they stop. What do you think of that kind of analysis, Kevin?
Yeah, there's a lot of people talking about that, Tommy, and you've got a market that's rallied already about 6% to start the year. You've got the 10-year yield around 3.5%, and that's a divergence from where Jerome Powell thinks the economy should be. You've got unemployment currently at 3.5%. So, and you've got an incredibly strong labor market with jobless claims hitting ridiculous levels. Now, starting tomorrow, we're going to get a big data set of employment data with JOLTS and ADP on Wednesday, jobless claims again on Thursday, and then non-farm payrolls on Friday. So we're going to find out a lot about the overall jobs market coming up this week, Tommy. But, you know, Jerome Powell has two mandates. One of them he's okay with right now with where the unemployment rate is, but then he's fighting inflation. And inflation has made great progress, but it isn't anywhere near where it needs to be, Tommy. And so I think Jerome Powell's biggest fear is a reigniting of inflation based on government spending of $1.7 trillion at the end of the year. Remember, that hasn't even hit the economy yet. So I think that's what Jerome Powell's seeing out there. He looks at an administration that, well, you could make a case that they're fighting against his work against inflation. And so he has to stay diligent, or inflation will reignite. And guess what, Tommy? That'll be on him. They'll blame him if it does.
Boy, it's interesting to try and get into the head of the chairman. I do it myself, and you do I mean, the chairwoman of the Federal Reserve, and that's a legacy usually. And, you know, depending on if things are going on, and things are going on in his tenure there, so there's going to be a legacy one way or the other. And boy, it's like, what is the risk when you look at it from that angle? Boy, there is tremendous risk if your legacy is that you let inflation get generational, and then you did it again by not going hard enough for long enough. I had a question on my program yesterday, Kevin, a caller calling in. Great question, talking about, you know, the market's trading higher. Is the market trading higher a real problem for Jerome Powell in terms of, is that type of analysis, is that making his job that much harder? Now, you have the market in many areas. You have the equities, you have the bond, we have the 10-year under 3.5%. Is that making that job even more difficult as we come into 2023?
Well, officially, right, Jerome Powell would say that's not his mandate. But Jerome Powell's also a human being, and he understands that stable markets, both going up and down as long as they're stable, is a good thing for what he's trying to accomplish. So I don't think Jerome Powell is worried about the stock market. Let's say if the stock market goes up 6% like it has to start the year, and based on his meeting tomorrow and what his comments are, it moves down to only up 3% on the year. Is Jerome Powell failing at his job? I don't think so. Not if he's fighting inflation and getting inflation to keep moving lower and not plateau at higher levels. I think Jerome Powell doesn't. He's cognizant of where the stock market is, but that's not his mandate, Tommy.
Yeah, it's pretty cool, man. Just all the data coming out. You walk through it. We have a Fed announcement tomorrow, and then we just get right into it, man, with an ADP jobs number on Friday, and it follows accordingly. Not to mention some big numbers on Thursday, but we got companies out today. We got some companies out already that are moving this morning. What are you guys talking about on Fast Market at 12 today, Kevin?
We're going to look at AMD in the first segment. We're going to look at Western Digital in the third segment. And then in the middle, like Folio is going to do a presentation on Match Group. So MTCH for those people out there. So we'll look at a little social media and a little dating apps on Fast Market today.
What happened to Match Group, man? I haven't taken a look at this one in a while. I pulled it up. One-way trip with many growth equities, I guess, from late last year of 182 to 38.64. Quite a pop to start off the year, like anything else, to 52.40. Give us a little teaser on Match Group, man. Boy, talk about some volatility.
Well, you know, growth stocks and social media companies and digital ad spend, which is one way they make money, all those have been under pressure, Tommy. And Match Group, though it may be the periphery of that digital ad spend and the overall social media stocks, they're still caught up in that, right? You're still on the internet. You're still engaging. There's still an advertising segment to it.
Sure.
So I think it got caught up in the group. Now, it's hard to correlate where a company like Match Group falls in, but it certainly can get caught up in a sector like that.
Man, and if you're not familiar, folks, I got it up here under the Analyze tab on the Thinkorswim platform, and it seems like, and you know, I haven't been on dating sites in 4 or 5 years, at least at this time, but I think they almost got all of them almost in there. I'm joking a bit. I know Bumble's a public company out there, smaller, but boy, you got them all. Match, including Tinder, OkCupid, Plenty of Fish, Our Time. Interesting stuff, nonetheless. Quite the chart. Kevin, we appreciate the time on a busy morning, man. We look forward to the show at 12 o'clock, and we'll talk to you tomorrow morning on Fed Day, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in. You heard it. They're talking about 3 great stocks. They're talking about some of the chips. They're talking AMD. Look at that equity. Yeah. Match Group, not the only one trading lower, man, from 164 down to 72. Pretty comparable charts on AMD and Match Group. Not like they have any type of business correlating. Western Digital, chips, $78 to 44, and Match Group. They'll be talking about these 3 equities coming up at 12, folks. They usually walk you through hypothetical trade setups. I tell you, even if you don't trade options, okay, understanding how options trade, understanding how they price volatility can give you an edge when trading equities. It's a great program, man. So much good information. I've learned a tremendous amount. Check it out. We'll be back, folks.
Possible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at S&P up about 6 points right now. Back to a 5-minute chart. You see the volatility from Friday's spike high. Yesterday's open at about 4,070. We were nearing that 4,000 price point at about 6:30 this morning. You catch a little bit of a bid from where we were. Now, keeping in mind, folks, all we did was kind of get back to this consolidation area you had for about the final hour of the trading day yesterday. We got up to the higher part of that line. You're higher this morning. You're higher by about 7 points. And let's jump into some of the equities that are moving this morning. Where are we going? Here we go. Okay, we got to kick it off with Exxon. You want to talk about some cashola. $56 billion in profit for 2022. Is this the one they did it? Yes, they did. $6.3 million per an hour for the entire year. That's 24 hours a day, 7 days a week, 352 weeks a year. Excuse me. Yeah. 24 hours a day, 7 days a week, 52 weeks out of the year. Every single hour, $6.3 million. Yeah, and all the majors together, they're going to take home nearly $200 billion this year alone. Profits, folks. That's a profit number. Remarkable. Jumping over, but guess what? Market knew that because you're lower by 1.3% today. You want to see what it's like being a publicly traded company, folks? Well, number one, okay, it's always nice when the market gets ahead of things because this thing just traded in September from $85. Now, we were basically where you were last earnings, right? In terms of where we are, where this price of Exxon was as we come into October numbers, October 31st, November 1st, et cetera. And I believe this spike here is going to be an erroneous spike from maybe a week ago. But nonetheless, you're actually lower on a record number of $56 billion. I think the prior one was 40-something billion, maybe. $59 billion. Revenue per share profit, 340, beat 329. Yeah, they had a year in 2008. All right, I saw it in another one of my charts. I'll pull it up. But they had a year in 2008, I think, that they made almost as much money as they just made. So Exxon, they're making all the money in the world, and their share price actually goes down. General Motors, well, they're crushing it, man. They're crushing it much more than the market had expected. Smashes expectations. Guides toward a strong 2023 despite a margin squeeze. Getting into it. How about it? $2.12 versus $1.69, and you check out revenue, man, almost $2.5 billion more than the market was thinking in 90 days. 43.11 versus 40.65. Full 2022 revenue, $156 billion. Net income, almost $10 billion. And the guidance. Net income, $8.7 to $10.1 billion. It expects adjusted earnings before interest, 10.5 to 12.5, and earnings per share between $6 and $7. Yeah, quite the number. And jumping over to GM, there's a pop for you, up about 6.4% to start things off from 36.50 to about 38.70. Jump over McDonald's with their numbers, trading down by about 1.7%. McDonald's numbers, profit grows as inflation-wary customers flock to its restaurant, but not up to expectations. Now, always interesting in terms of very few companies, it seems like, are missing across the board in terms of earnings and revenue. But where's the guidance going forward, and where's the profit expectation going forward? Most importantly, most of the time, the food giant is expecting that short-term inflation will continue this year, according to the statement from the CEO. Shares were down a bit. The company recorded fourth quarter net income, almost $2 billion. Net sales fell 1%. to $5.93 billion, but rose 5% when stripping out foreign currency changes, right? Globally, same-store sales slumped 12.6, fueled by same-store sales climbed 12.6 in the quarter globally, fueled by strong demand in the U.S. and its largest European markets. Now, McDonald's has performed very well this year, last year, overperforming the market to say the least. I mean, this is going back a year ago. Let's go back a little bit further. We'll put it on a 3-year weekly to show. You're basically right where you started off the year 2022, and that was after a pretty strong 2021. Held on to all those gains, traded low in the beginning of the year with the market, and then clawed it back. But, geez, you talk about numbers, man. 12.6% in the quarter. They're already dealing with some pretty lofty numbers, man. The home market, higher menu prices, right? Increased demand drove same-store sales growth 10.3%. The market was only looking for 8.1%. It is amazing that a company like McDonald's, which reaches everybody, okay? Like if you're not eating McDonald's last year, who's not eating McDonald's last year, but you're eating McDonald's this year? I mean, but somehow they do it. They grow sales 12.6%. Same-store sales grow 10.3%. How are they doing that? Well, they're raising prices, to number one, and they're manufacturing demand. Whether it's the McRib they talked about, they had a farewell tour for the McRib. When's that come back? Next year for another farewell tour? I kid. But outside of the U.S., stronger than expected growth. International operated markets, same-store sales growth 12.6%. Strong performance in the UK, Germany, and France. Look at that. And then the international development licensed market, 16.5%. Just staggering numbers, man. 10.3 in a pretty mature market, you could say. I'm putting it lightly, obviously, in the U.S. 12.6 across some of the bigger countries in Europe that they're handling. And then when you get into Japan and Brazil, 16.5%. China, however, lower numbers due to COVID. Not surprising there. How about this? This year, almost 2,000 new restaurants. Where are they going? Now, 400 of those are going to be in the U.S. Okay, here they go. More than 400 of those will be in the U.S. and international operated markets. The rest will be opened by developmental licensees. So I think when you talk about the developmental license markets, right, you're talking about Japan, Brazil, developmental markets, obviously. Nonetheless, strong numbers for McDonald's. They trade a little bit lower, but that stock been doing well. GM, as we mentioned, trading higher. We talked about Exxon. Yeah, Pfizer. So Pfizer, they're going to see a dip in their numbers, man. Sales to decline as much as 33% compared with the record-breaking year they had last year. $67 to $71 billion coming up. Not bad, but guess what? Well off the $100 billion in revenue the company booked in 2022. Earnings, much as a 50% drop. 325 to 345. They made 658 last year. Yeah, they're a little bit lower in the market, but the market knew this. Mostly. And you're down by 1.2%. So the market somewhat knew that. Chopping around well off of where this closed out the year 2021. Yeah, 2021, not 2022. Look at this. We got the Dow slipping back into negative prices as we kick things off. You got the NASDAQ holding on to gains barely. S&P's holding on to those 7 points right now. And what else do we have going on here? Spotify. Their shares trading higher. 489 million monthly active users. 205 million of them paid. Not bad, man. If you think about it, right? If you said you're going to start a company and you're going to be able to get almost 500 million people using it, and of those, you're going to have more than 40% of the people paying. That's remarkable. I mean, that's anyway. Earlier this month, Spotify announced plans to cut some of their workforce out there. Loss per share, $1.40. This is in euros. Huh? We're talking euros. Revenue, $3.7 billion. Maybe they're writing this out of the UK office. What are they traded? Is it spot? There you go. From 100 to 108, you're up by 8.5% to kick things off. Stay tuned, folks. We'll go over some of the other equities. We'll go over some of the equities with the numbers tomorrow. Talking about Google, Alphabet, Apple, Amazon, all coming out Thursday after the bell. Stay tuned. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the markets in positive territory. Dow back in the positive. All the markets in the green right now. We jump to crude, sitting at about 77.56. You take a look at this thing, man, on a weekly. Just remarkable where we're chopping around at. You're talking about 77.57. You see the acceleration that we had basically in November of 2021. You begin that acceleration from $65 up to $130, and we're just chopping around. I don't want to call it no man's land, but it'd be pretty interesting if we get back down to 60 and change, folks. A lot of the pressure could be to the upside, but nonetheless, we keep saying that. And on a daily basis, we keep saying that. And nonetheless, we just traded down $5 from $82 a week ago from where we were on that price of crude. You jump to gold with some volatility with the dollar this morning, 19.40 down to 19.15. We're back on our way, it looks like, to 19.40. We jump over to that dollar index, DXY. And you basically see an inverse of that gold chart. Dollar index up to 102.60. On dollar strength, you had gold weakness. Dollar pulls back to 102.20. And with that, you get dollar weakness. You get gold strength. Gold back up to about the 19.40 range. And as I jump around, we take a look at yields before we jump back. And you got the 10-year with some volatility on that number as well. And we're talking about a yield basically sitting right at about 3.5%, the yield on the 10-year right now. All right, as I mentioned, we got companies with earnings. We got three big ones on, Thursday. And yeah, let's get right into it, man. Amazon with their numbers on Thursday. My son's birthday. He's going to be 2 years old, man. Amazon, you're looking at about an 8% move in either direction. We got a 2% pop coming into today's action on Amazon. We're up to 102.62, recent high of 103.49. This thing got clobbered last year. And yeah, if you're looking for where we're possibly going to run into, you're coming into an area. This was an area of support back there in the middle of last year. Okay, you're talking about the range from 100 to 110, maybe even up to 120, where you chopped around for basically about 3 to 4 months on Amazon. That's also going to correlate to the area that's the 382 of Amazon, about 106. 106 and change potentially. We're sitting at 102.49 right now for Amazon. So they're out with their numbers. We get the big dog Apple. They're out with their numbers. Now, it's interesting, right, in terms of how much Amazon is a growth company. You got 8% volatility priced in either direction on their numbers. Apple's not a growth company anymore, folks. Okay, they are. But, I mean, you hear, Warren Buffett owns X shares of Apple shares, which gives him a dividend of X hundreds of millions of dollars, whatever it is, right? They have such a source of revenue, Apple, at this point. You're only talking about a $6 move, which is just more than a 4% move in either direction. Okay, that's pricing in a 4% move in either direction in terms of Apple. You just saw Amazon was looking at about an 8% move, and we jump over to Google. Google, about a 5.5% to a 6% move, somewhere in the middle of those two. So you can see Apple, more established, less volatility. Google, somewhere in the middle of there. Amazon, 8% move priced in with Amazon, and Amazon's got some volatility, man. And that's a perfect segue to talk about Amazon. They're trying to lower the prices at Whole Foods. Now, interesting, I don't shop a lot of Whole Foods right now where I am. There is not a Whole Foods out near me right now in the middle of Florida that's very convenient to get to. But nonetheless, not surprising that they're looking to suppliers to cut costs, man, for Whole Foods. Now, this one's an interesting one in terms of, do you know how long ago it was that they bought Whole Foods? It's like 5 or 6 years ago, folks. Amazon bought them. And they've literally, for all intents and purposes, in the grand scheme, done nothing with it. Okay? They were going to take over the grocery industry. No, they still own pebbles compared to one of the big players in that industry in terms of what they control. But nonetheless, even on Whole Foods, Amazon told suppliers at a recent virtual summit that it wants to bring down retail prices in its store aisles as companies' own costs start to decline. Yeah. As food suppliers have raised wholesale prices, citing higher transport, labor, and production costs, Opera has said they've passed those along to consumers. The higher price tags have helped grocery store operators generate higher sales and profits, but after more than a year, shoppers have been cutting back on purchases, buying cheaper versions. We know our customers are weighing the impacts of inflationary pressure on their buying choices. That is the Whole Foods Senior Vice President of Merchandising. That shouldn't be surprising. Now, the company's worked over the past year at absorbing rising costs, and the rate of price increase at Whole Foods has been lower than the industry average. Not surprising, right? What does Amazon do, man? Amazon, they forego current profits to consolidate an industry, take market share, then they do the profits at a later time. But overall inflation is starting to slow. Grocery prices have continued to climb, but the pace has decelerated in recent months, rising 11.8% in December from a year ago, compared to 12% in November and 12.4% in October. I mean, I know that food and energy aren't a part of the core numbers that the Fed controls, but these are the numbers that are still bonkers, okay? When you talk about that the Fed is possibly going to stop hiking in May, which is right there. It's possible for sure. Well, we're still dealing with 12% rising costs for food, folks. That is slightly abating. But how long is it going to take to get back to reasonable when you're going down 0.4% from October to November and 0.2% from November to December, and you're still dealing with a number in December that's pushing almost 12% on a year-over-year basis? Let alone everybody's got the stories about eggs and butter, man. Eggs. I got a story about eggs in terms of talking about the cost and how quickly the costs can get expensive, even when you're talking about raising your own chickens. Everybody wants to hear about eggs, folks, because they know how expensive they are right now. Foot traffic to Whole Foods decreased 8% in the fourth quarter last year. Right? Check that out. You got Kroger and Albertsons have experienced declines too. I mean, you can't stop buying food, but you can be more observant of what you're doing and the money that you're spending in there. And looks like Amazon aware of that, not surprising to say the least. And we'll jump to that egg story. How about it? We don't have to go through the whole thing, but an interesting read. I was checking this out this morning, just talking about raising chickens for cheaper eggs gets expensive fast. If you don't think consumers are aware, folks, that not only are they going to be price shopping, they're just going to go out and buy some chickens and raise their own eggs. Consumers have decided to raise their own chicks. And as you may expect, not always as easy as you may expect there. Carton of eggs up 60% year over year, man. That flu, wiping out so many of the chickens, wiping out the eggs, that's going to take time to replenish. Nonetheless, we're dealing with it right now. Yeah, so keep that in mind as things progress. Talking about people raising their own food. I was thinking about this interesting myself, talking about I just bought, what did I buy? I bought some herbs. Cilantro. That's what I bought. I bought some cilantro for some guacamole. Folks, you ever want to make some good guacamole? It's pretty simple, man. You get some nice ripe avocados, okay? You put in maybe a little bit of olive oil. You got some garlic olive oil, maybe just some fresh garlic in there. Put a little cilantro in there, some lime, some salt. Mix it up. That's basically all you need. You can throw in some tomatoes in there if you want as well. Throw in some onions in there if you want as well. But cilantro is a good one, man, to throw in some guacamole if you're ever looking for it. Olive oil, guacamole, salt, cilantro, and yeah, mix it all up. You get some beautiful guacamole, and avocado is pretty healthy fat out there as well if you're looking for some healthy fats to get into your diet. But nonetheless, avocados have it going up, man. Yeah, they're still like $1 a pop. Not exactly the cheapest thing out there, but when you're talking about your health, folks, don't just eat the cheap stuff if you have any say in it, because boy, somehow consumerism, right? I got kids in the house, man. Somehow they all think that eat the cereals like what breakfast is supposed to be. How did we get that one, man? Sugary processed carbs covered in sugary milk. Anyway, we'll talk a little bit market. We'll finish it up, folks. One more segment. Don't go away. S&P's charging higher, up by 15. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up by 11 points. And yeah, just jumping around. You got me on the tangent. And, having a young child in the house, folks, makes you observant of more than you've been observant of probably before that child was in the house. Nonetheless, looking at labels, there is added sugar in literally everything you consume. That's just how it comes down. Now, just Googling a couple things real quick. Just even having little Tommy having his food, wanting to eat, him to eat healthy, right? You buy a bunch of fruit. I've started eating healthier because it's like, you get all this fruit around the house, folks, and I'm eating it. And I'm like, fruit's great. Why haven't I been eating as much fruit? It's delicious, man. Why haven't I had it? Well, you know why? Because it's a little bit more expensive, right? You got to cut it. You got to do a couple things. It's not as easy as throwing some cheap snacks or whatever it is, etc. Okay, but nonetheless, this one's interesting though. I just Googled cereals. I was like, how much sugar, right? Even these 7 cereals, even the healthy ones are crap, folks. Okay, now there are some healthy cereals, I'm sure, to what you can do. Yeah, you get some good oatmeal, you get some strawberries, stuff like that, right? But even these 7, listen, random article somehow from CNBC, October of last year, talking about new guidance, but which ones? They're like some of the healthier ones you're talking about. Honey Nut Cheerios, 12 grams of added sugars. That's per serving. Okay, Honey Bunches of Oats, 8 grams. Frosted Mini Wheats, 12. Special K, talk about sodium in some of these too. Corn Flakes, Raisin Bran, right? Those are the healthy ones, let alone. And listen, don't get me wrong, man. You got to splurge in life. Life's short. Have a little fun, okay? Eat a bowl or 2 or 3 or 4 or Fruity Pebbles sometimes when you're splurging. But kicking your day off with it, man, different story. Nonetheless, this market, folks, it's pushing highs, nothing holding it back right now. Interesting. We come into a Fed day tomorrow. We got big time economic earnings to follow. And, you know, you make it through the Fed meeting, folks. We're right into it. We got ADP numbers coming out. We got non-farm payrolls on Friday. And you got 3 of the biggest equities coming out with their numbers on Thursday. So it's going to be a wild week no matter what. Stay tuned. We got our man Basil Chapman. He's up next, folks. Steve Rhodes at 11. Fast Market at 12. You heard them. They're going to be talking AMD. They're talking Western Digital. They're talking Match Group. Talking about 3 different equities with our man Kevin Hincks. Then we got our man Larry Pesavento at 1 o'clock. We got our man Dave White at 2. My dad, Tom O'Brien, live from 3 till 4. Thanks for starting your day off with me, folks. Have a great Tuesday. We'll talk to you tomorrow.